So as we've learned, a bank reconciliation is something that needs to happen every month. It's a way to prove what you say you have in your account or on your books is the same as what the bank says. And it's important to do that because a lot of times errors can occur or there might be fees applied to your account that you're unaware of. So you want to make sure that the balance in the bank statement matches the balance in the company's records. Okay, so what we see here is some information about a company, Urethane, for June 30th. We have a balance on the bank statement of $9,143. Then we have our accounting records information, which is a cash balance of June 1st of $3,943.50. We had cash receipts of $28,971, checks issued of $28,388. And then after analyzing the statement, we found the following information. The bank had collected from Urethane Company $1,030 on a note left for collection. The face amount was $1,000. A deposit of $1,852.21 representing receipts of June 30th had been made too late, so it didn't appear on the statement. Checks outstanding, deposited just over $5,200. There was an error in a charge for a check drawn. A check for $30 was returned. In the company's records, it's $240. The check was for payment of an obligation to Avery Equipment Company for the purchase of office supplies on account. And then we had a bank service charge. So what we're going to do is we're going to take this line by line and we're going to create our bank rec and then create the journal entries that correspond with it. All right, so the first line we're going to do is the cash balance according to the bank statement. And we see that that is up here in the amount of $9,143.11. Then let's put in the cash balance according to the company's records. So we know that as of June 1st, we had $3,943.53. We then had some receipts and some expenditures. So what I'm going to do is I'm going to do some calculations here. Equals, I'm going to type in $3,943.50, a receipt of $28,971.60, and a decrease of $28,388.85. Now, sometimes when you're doing bank recs, it'll just give you that number, but for here, we have to calculate it out. Oh, I have a error in my formula. I'm going to say yes. Let's assume the computer's right. All right, there we go. It may have been I put an extra space or something in. All right, so let's start with number one here. The bank had collected for Urethane Company $1,030 on a note left for collection. The face amount of the note was $1,000. So this is something that came into our bank account that we were unaware of, that the bank did it for us, okay? So it's going to be an addition to our cash balance, in addition to the company's cash balance. So we're going to say proceeds of notes collected by bank, including $30 interest. And then we'll plug in the amount over here of $1,030. Now, you don't have to worry about dollar signs and all that kind of stuff. I have it formatted that where you need the dollar signs and stuff, it's going to appear, okay? All right, the next one. A deposit of $1,852.21 representing receipts of June 30th had been too late to appear on the bank statement. So that means we have it in our records, but the bank doesn't have it. So we need to add it to the bank's records. All right, next. Checks outstanding totaled $5,265.27. Okay, so we know that we wrote these checks and issued them, but the people we wrote them to haven't cashed them yet. So according to the bank, that money's still there, but we know that money isn't there. So we need to put this as an adjustment to the bank's balance. Okay. All right, next. A check drawn for $139 had been incorrectly charged by the bank as $157. All right, so for this one, we wrote a check for $139, but the bank cashed it for $157. That means they shorted our account. Okay, so we need to add that money back in. All right, so their statement is going to be incorrect by the difference of those two checks. Okay, so they charged our account $157, but it really should only be for $139. So that is a difference of $18. Okay, that's $18 more that the bank statement should have. All right, a check for $30 returned with the statement had been recorded in the company's records as $240. Check was for payment of an obligation to Avery Equipment Company for the purchase of office supplies on account. So this is an error we made. We recorded a check saying it was for $240, but it was really only for $30. So that means that we are stating we have $210 less than we actually do. So that's going to go here, error in recording check. And it's going to be the difference between the 30 and the 240, which is 210. And then the last one, bank service charges for June amounted to $18.20. So that's money that came out of our account that we were unaware of. So we need to adjust our balance. All right, so now let's do some calculating. So we had these two that are going to be added together. So just like we do in our financial statements, if it's something that's going to have a subtotal, the numbers go in the left column and then the final number goes over in the right. Okay, so we're going to auto sum these two. All right, so we're going to add in what the bank said we had, plus the things that we know happened. And then we need to subtract out this is outstanding check that we know somebody is going to cash. So we have a bank balance of $5,748.05. Now, if we did this correctly, this is going to match what we're going to get down here, okay? So we're going to take these two and add them up. And then we will add what we said we had plus the things we found on the bank statement. And then we will subtract out that service charge. And we see that they match. Okay? So that's the goal, to get these two things to match. Now, there are some things that happened after reviewing the bank statement where we had money coming in or money going out. And that means that we need to record some journal entries. Okay? So the first one is going to be for all of the cash that we received. Okay, so we have two cash ads that we got here. All right, so we need to account for this. So we're going to say June 30th, we have a debit. We have a debit to cash in the amount of $1,240 because that's how much the bank said we had that we were unaware of. Okay, and then we do all of the credits, the other accounts that were affected. So the first is this notes receivable. Okay, they collected for us on this note here with interest of $30. So the person that owes us that note no longer does. So we take that off the books because we got the cash in the amount of $1,000, and $30 was interest revenue that we earned. We earned some revenue by lending those people some money. Okay? And then the last thing is the accounts payable. So we originally recorded this error in recording check for $240. That means we debited that accounts payable account by $210 more than we should have. So we need to put that back to their accounts payable because we still owe them. that $210. Okay. And then the last thing is the deduction that happened in cash, which is the bank service charge. Okay. So that is going to be a debit to miscellaneous expense in the amount of $18.20. And then a deduction in cash of $18.20. Okay. So that is a bank rec. The other thing you might see on a bank rec is what's called an NSF. That's a non-sufficient fund check. That means somebody wrote you a check and they did not have enough money in their account to cash it. Okay, so we actually did not get the money. We thought we did, but we didn't get the money. So if you see an NSF, that's going to be going down on the company records part of the bank rec.